Morning and welcome back to the Opportunity 12th week. $50 whips left. What
4-1 with an open crude.
That unbelievable follow. One indicator that sort of gave a over that VIX index, VIX cash for work to. We had the down move that was then as we had the down move, at indicator 25-30% below, which means looks like last night very today fixed cash 12%. Those disparities gave us the opportunity to notice down move was coming. B, make the bottoms in yesterday. VIX got 29, and the VIX futures never got above 24.25. So looking at that, it leads me to believe, that the market is bottomed. I don't love this opening. Market has come in a bit since I walked in. It's down about 5-6 spoo handles. NASDAQ's only up 100. It was up 140. This isn't an amazing opening. You can't buy this opening for sure. The fade on it is a medium fade. I would fade it utilizing options in indexes that are away from the money. Looking at the 2790s, selling those at 5.25. That might not be a bad idea. Gives you room up to 95, so you don't have to work in here. The market wants to trade up. Stocks are crazy. I mean, Apple's up literally $4 this morning. I know they crushed it, but $4 move is pretty big. I think a lot of it may have to do with the fact that they pulled that BS with the meeting with Xi in China, at the G20. That
you really are in the back of your mind hoping for like some sort of a Chinese ban on Apple products. I think it would be so cool if it happened, but
yeah, I don't think it's going to happen. I think they're scared. But I notice all these stocks that are China related are ripping. Not China related, but could be hurt by the tariffs, like Micron Technologies. All across the board.
So implication that we would be potentially, based on recent events, potentially backing off on our stance on trade with China, and that means more flow. I guess.
Could be possible. I mean, listen, I don't think the market is by any means out of the woods. It does not look good. This opening is good, and it'll be interesting to see how it trades. It's going to go wild. I mean, yesterday at 2:30, I don't know if you saw that program that came through was probably one of the biggest sell programs that I've seen in a long time. I mean, it was just massive volume.
We actually did get some algos that came in on the sell side below 2%. I mean, kind of like what you and Druckenmiller said like a week ago.
So I think that these algos are getting smashed, but what do I know? I don't know. I just can't imagine that anybody could hang in. Futures are trading at 15. They literally rallied 60 SPU handles in 15 minutes. It was pretty awesome to watch. So, we'll keep our eye on that. We are long oil. That's the only open position that we have now. We're long, I think, at 71.33. It's trading up a bit higher. It's funny because that's the worst acting thing on the board. The SPU came pretty much back, and oil, it's up
Hasn't
70
bounced.
cents, but
Right.
it started the week above $75. So that's a smash job. It's actually down way more than the S&P. So we'll see how that settles out. The VIX is bouncing. It's $1 off the low. It was down about 16-17% this morning. People people need to own it. This correction, I'm going to go on record, is not over by any means. The market, which the Dow at one point yesterday traded flat on the year, pretty close to flat on the year. I say on this move that all indices other than NASDAQ will probably be negative on this move. Now, that might take another week or two. But I think coming into the midterms, which Trump is going to get annihilated, it's going to be an annihilation.
And we may not even be discounting that yet.
I just think it's going to be an annihilation. I mean, the guy is off the rails, and I can't imagine that people could be happy. They had the guy, they had the Fed Evans on today. He was in the University of Michigan. They were doing some conference, and he asked them point blank, what do you feel about these? Like, he couldn't even answer.
I'm better at monetary policy than they are. That's the
right. They're loco. They caused the. What's
But here's
funny,
the thing, though, Larry. Here's the thing. The voters are going to say, "Yeah, it's Powell's fault. Trump was right. The market should have kept going up." And I don't think he's going to do well in the elections. But I do think the stock market is pricing in potential problems surrounding the elections, as well as the Fed independence.
Really? I don't know. I think we're going to get much heavier volatility, and I think that it's going to be a really wild next 2 years because he's going to lose everything. He's going to lose control of everything. So,
but as trading goes, you're happier with as active traders go, the way you trade, and to a lesser extent the way I trade, even as an options trader. Those big down moves don't do much for me unless I have a position. I like the days after the down moves where people are squaring up and there's swing trading to do. I mean, yesterday was an example of that, I think, for you.
Yeah. Anyway, I don't know how much you touched on gold, but gold had its biggest up day of the year, pretty much.
Yeah, we called it before the move, and we called it after the move, and we reminded people of how smart I am today on the gold fix. But yeah. Not much to talk about in gold. I mean, it's out of a range now. I think the monthly close is important. The market could retrace again back through the teens, but it's all about the gold rallying like technology stocks on the yuan and the dollar, and it's it's the least thing to be focused on right now. I think with so much opportunity out there in the indices and individual stocks.
Yeah, I think. You're right, but yesterday's move caught everybody, I would say, and we'll keep an eye on see if there's any follow through. They're out of the teens. I don't know what the high was yesterday, but it might have gotten up to 35, 40 or something.
I do have levels, but I'm not going to throw them up until you get to the meat of what you talk about your trades yesterday. And what you look for today, because I give enough time to it.
I think today is a fade, but the only way I would fade it is utilizing options. The vol is down. It's interesting, the S&P is trading at 70, and the 70 straddle, believe it or not, is only $25. If we looked at that straddle yesterday, and Mike was looking at it, it was over $50 yesterday for pretty much every straddle on the board. So people have calmed down. Volatility is, is in a bit, but I don't know. I feel like there's not the same sense of panic as there was yesterday in the market. I'm not saying we're going to end that way because we could end in a full panic. That I'm not sure about. But
Right.
but just
And it is a Friday, so
it seems calm. It actually seems calm. The S&P isn't moved more than $3 since I've been in. You know, we were up at about 75. We just got down to 72. You know, you're talking $3-4. I mean, we were moving. I mean, yesterday was pretty awesome. I mean, it was moving $50 on a dime. So, you know, got to look at that. Crude oil looks terrible, actually. I don't know why, but it doesn't rally at all. We're going to give it a little bit more time to try to stay in this long, but we're going to kick it. If it doesn't work, we're up slightly on the trade. We don't want to turn it into a
Brent
loser.
TI's in $1 as crude has come off the highs. So that's I think that's pretty significant too. Especially with the dollar itself gone from.
Well, what does that mean? We're in a bear, you know.
Well,
when
no,
we get bearish, that spread comes in.
No, well, well, there's, I mean, forgetting the macro part and just looking at it in micro, you know, the correlation as a spread is, you know, kind of like a crack spread. If WTI drops 50 cents, Brent will drop 55. If WTI rallies 50 cents, Brent will rally 60. You know, it kind of moves more. But this move down, it's a 20% drop in the if crude's off $4 and the spread is in $1. I'm not saying that that's a sell or a buy. Maybe that means it's overdone and crude's a buy. But it does mean that, you know, there's probably some speculative froth that's gotten out of the market. Whether it's enough or not, I don't know. I just think it's kind of interesting that the dollar, which is supposed to be inverted to oil as an inflation indicator, as the dollar weakens, oil drops. You know, the gold is, I mean, I'm sorry, oil is a stock basically now, you know, and like you said, it hasn't rallied or bounced with the bounce in stocks. So you're looking for that to happen, and hopefully it will.
That's we'll see. You know, we're a little bit long. It's funny. I just got a text. We were in a Chinese paper this morning, so you know, we're getting out there. We're what do they call it? We're worldwide. We're worldwide now. So you know,
Trader Global. Trader Global.
You know, it's interesting though. People are coming to us when the market gets uncertain because it's, in a way, you need a professional to sort of tell you what's going on, not you know, a bull market or bull market team or whatever, you know, is out there. All these bull market guys guys and girls that you know, just buy and they never sell. So
right, we've had 5 years of incessant rallying. So every person they've had on their Rolodex to come on the air can talk a bull story. And I think when they wanted to call these people and say, well, we're lower, what do you think? Is everything a buy? I think they got busy signals or not picked up. And so they actually had to talk to someone who could trade both sides of the market. And there aren't a lot of those out there left, let's face it. So, you know, that puts you at the top of a short list.
Yeah, for sure. Yeah, we're, you know, we're market professionals. You know, I always equate it to, you know, if you cut your finger and you need surgery on your finger or whatever, you're obviously concerned, but you're not as concerned as if you're having brain, you know, surgery. Then you want to go to the best guy in the world. So, you know, this is a time, I'm not equating it to that, but this is a time where it's a lot more uncertain. You can't buy and hold, and the markets are going to be, you know, they're going to be iffy. But it's interesting, you know, the market, again, you can't really fade this opening, even though you'd want to. It's just down too much. It's oversold too much. But you can fade it by utilizing options. And I'm looking at like the 2,800 calls at 3.5.
So you think the volatility's been crushed on this rally, and it's actually a good balance to get back in?
It's not really bearish. No, it's actually not crushed. It's only down 10%. It will get crushed if we hold in here today. but utilizing options for your short is a is a really good way to take advantage of putting a position on and giving yourself a lot of room. And when you're in a 20 vol,
right,
you could do that and be forgiven a bit. Obviously, yesterday was crazy. I mean, I was looking at the 2,700 puts. We never got below 2,700, but they traded like $27 or $25 when we ticked down there. I mean, it was a Armageddon panic. I mean, it was a panic. Vol was almost 30. Got to 29, I think, yesterday. I'm not 100% on that, but I think the high was either in the high 28s or low 29s. I didn't catch it.
I'm listening as a student, and I just want to say this, I think, for other people who may be listening. This is my takeaway, if you don't mind me saying this as a student listening.
I don't know what you're going to say.
well, no, but the market rallies. Vol has been strong. Vol is in, it's not crushed. My own knowledge is that I think vol will continue to rally if we go lower. We've already seen that proof, so to speak. So although vol may be in and vol still may be high, the best way to express possibly a bearish position on a bounce is with options, because you'll have the bonus of the expanding volatility on a move lower. You won't have to spend as much money.
Yeah,
that's just that's my trade. I'm thinking of that trade right now as we're talking about it. That's what I'm looking at.
Yeah, and looking at it, we discussed this before the down move. It's always better to use volatility on a down move. Like vol was up 44% on the 800-point down day when the market was down less than 2%, or in that, actually, I think it was down 3%, but still up 44%. You're much better off playing that game, because all these funds and all these indices and all these products are meant to be sold. So people and algos just continually sell this vol, and it'll be we're gonna continue to correct in here. I'm not bearish today. I would sell upside, just because I don't mind getting short at 27.90, 95, but I don't know if it's a sellable rally, because we're so oversold. So if you're going to play it to the short side, I would sell, upside calls. There's also a ton of good ratio spreads to do. You could do the 90 par 1x2, which is a vanilla spread. You could do the 90 par 1x2 in the futures, which would equate to pretty much in the SPY doing the 78, 79 1x2 for credit, the 278, 279. Those are good spreads. You're protected up to even, and then you could middle it. It's better than probably selling the outright premium. Although,
actually, and because volatility is stochastic, in that rally, the volatility will work for you on the 1x2. You'll be collecting premium.
Right, and then the vol should come in if we get up to those areas. But
you'd be right directionally, and exactly. As opposed to selling two and buying one on the downside in a put skew market, which is what energy is as well. But what stocks are, that's something that you want to,
I want to point out one thing that's very interesting, and it's something that we queued on about the last couple of weeks or almost to a month, is the underperformance, and we're seeing it again today. The DAX is up 30 basis points. It's actually, I don't know, about 120 points off the high of the day, and our S&P is kind of on the high of the day. It's $7 off, but it's near the high of the day, and that index isn't up. And if we look at the DAX on the year, it's probably close to down 10%, and we're still up 3.
Right.
So,
and our loss hasn't been their benefit. Let's put it that way.
No, I mean, our loss makes their loss even greater. I mean, you saw that in Japan. I mean,
I know.
2 nights ago.
The point is that the stock, the indices globally are converging not by them rallying right now, but by us selling off, which is, not good for anyone. There's nowhere else to hide.
And they couldn't open like 1,500 stocks in China on Wednesday night. I mean, it would be there Thursday, but that stuff is pretty crazy. But again, right now we're calm. Everything is okay. So we'll
Larry, just to chime in, what sort of initial signals are you looking at in S&P to fades or buy the dip?
I'm not fading. I'm not fading right now. I mean, I would like to see the market take out this morning's high, which is 85 on the futures. I could be a seller in there, but again, like I just discussed, I wouldn't really go to the futures as much today. I would utilize options to give me a lot more leeway. So if I want to get short and I sell the 2,800 calls, I'm not getting short to 2,804. Okay, there's a lot I can do around that to hedge out the risk of that 2,804 sale.
But new highs is where you would start to have it on your radar to look.
Yeah, I would like to. Again, I mean, we might not get there, and
you might not do anything anyway. But I'm just saying off your radar.
I'm not gonna know until after we open and see all the different things that we look at, see how the stocks are acting versus the futures. Sometimes the stocks lead the futures, sometimes the futures lead the stock. But I'm looking at I'm looking at the E-mini. I see it's getting close to 80. Again, I've been saying it since we've been on here. I don't think it's a fade right now, but it could be a fade in an hour. I have to see how everything looks. I want to look at crude oil. I want to look at all the different indicators to see, what kind of clues are working for the day. Again, the foreign markets are weak or weaker than us. That hasn't helped us. It looks like they want to buy stocks. It's just a matter of what time they run out of either money or run out of, of basically buying power.
All right,
but
here's question number Vince and Larry. It's been a crazy volatile week across all asset classes. What do you think we're going to be doing into the close? We'll talk about it more in the afternoon. What's the mindset going into the close, going into after a volatile week? Selling pressure, I need to get out, or liquidations, or is it margin issues, people get tapped on the shoulder, or is it all?
Well, for now it's all clear. You don't know what's going to be later. I think that a lot of that margin selling comes at 2 o'clock or 2:30 yesterday. A lot of that program was selling. What's been interesting for me to look at, and we look at this, and it's actually a little bit angering. We get the market on close imbalances off the floor. They post them at like 2 o'clock, and they're posting billions and billions for sale. And last night it was like $4 billion for sale on the close. The night before, $3 billion. So I don't know what that is. So obviously we'd want to see those imbalances, see if they're going to be market impactful. We want to watch the trading action for the day to see if the market can actually hold these levels or hold this rally. In one hand, the market is severely oversold on a short-term basis. But on the other hand, looking at it longer term, the market, in my mind, is going to be down on the year, close down on the year, and be in a panic off of what's going to come out from the midterm elections. But that's not going to give us any mindset into what's going to happen Friday on the close. It's a great question, but it's very difficult to answer right now because there's going to be, as an active trader that trades many times a day, there's going to be multiple things that are going to happen. If the market does not hold today and gets weakened to the close, there'll be nobody that wants to take it home long into the weekend. But if we trade 15 to 20 points higher than this, then everything is fine. Vol will be under 20 or at 20. It's now 21.72, getting crushed 15%. Could go below 20. If it, 19.20, it could be the end of the problem. So again, we're going to watch all day. So, for me, I'll let Vince answer. For me, it's going to be watching the tape. I would want to sell here, okay? But The problem is we've done this trade before. We've had a couple of up openings that haven't held. So I'd like to see it get a little bit more strength and then maybe look to fade it. But overall, you know, for the close, I'm not really sure. But if it closes weak, we definitely want to go home short. Do you have any thoughts, Vince?
Well, just my takeaway from what you just said is, I want, look, you're above a lot of people's heads because you are looking at so many things and you tape watch all day. And I'm talking like a beginner here. And I'm saying, it seems to me that there's a lot going on. And unless something intervening happens during the day, I'm going to pay attention to the market if we make new highs and see if there's a possible short to do at that point. And that's what I'm looking at. But in answer to Michael's question directly about volatility, I think I can add two things at a simple level that get me through markets like this, and that is, if you have a system, if you have a discipline, or if you are following and working with someone else's system, we're going to have a more volatile market. Volatility is not risk. Volatility is a risk management tool. So if you trade 5 lots, or let's just put it this way, if you normally trade 2 lots, trade 1 lot. If you normally trade with a $5 stop, trade with a $10 stop. The key, I think, now to continuing to make money, if your strategy is good, is either widening your stops, lightening your volume, and letting the market reward you, because the volatility is just beginning longer term.
And I love what you just said, because that we put out yesterday. You know, give yourself room. Like we would do a trade for 5 handles, 3 handles back, 12 volatility. Now we're at a 20 volatility. You got to take that 5 handles and turn it into 18 handles or whatever.
Right. Look at a dog like gold. I'm 500 up in a $2 range. I'm 10 up in a $20 range.
Right.
It's like, how could you be? You can make the same money with the people. This is so important. People are so scared of volatility, but once you understand that it's all about managing your money and managing your risk, whether you have a hard stop or not, whether you look at a lot of different things and determine what your stop is based on those moving parts in your mind, just know this: my stop is I will only lose X amount of dollars. Well, either I got to widen my stop or I got to lighten my volume, because the market's going to reward you with so many more opportunities to trade in this market, whether it is sell the rally with a tight stop or a wider stop and smaller volume, whether it is sell weakness with options, whether it is trade the range like Larry does, whether it is momentum. Like for me, momentum right now, my system is shot right now. All the momentum things are shot. I have to trade differently now. And so right now I'm watching. I'm sorry to interrupt. I just hear people on TV.
I like the point. You want to size appropriately to the volatility. That's what made us great for years and years and years and years, is having the ability to size basis the volatility, figuring out what the market moves today are. So today the market's starting up 33. It was up $40. So we've already had a $40 range on the day. Okay. Are we going to have a $60, $70 range, or are we going to come in and trade inside the range? Nobody knows that, but at least like right now, at this moment, you could probably take $20 out of the futures, and the futures are very forgiving. Okay. They're very forgiving.
Right. They're forgiving. And for people who hear that a lot, and that means they give you more chances to make money. Typically, a market like gold is not forgiving. You missed your opportunity. But, now if you look at the stock market, there's many opportunities. Get out if you're wrong, get back in. That's what forgiving means, I think.
Yeah, well, and forgiving means you could sell 82s, it could go to 87, and then you could buy 71s. That's forgiving.
Right. Well, yeah, there you go. Lighten your volume, widen your stops. It's forgiving. Right.
Oil doesn't do good. I think we're going to punt out of that in a minute as soon as we get done here. I don't have the mindset.
So we've got a pretty active day. It's been an active week, but we have a great lineup today. We're speaking, obviously, now we had the gold fix to start the morning. Right. And at 9:30, macro, all talking about a lot of these. So he's coming on at 9:30. Speaking of then, Alan Hill's talking FX, and then at 11 o'clock we have coming. 12 o'clock, Mark Fisher, and then we're going to be active in the afternoon as well. And throughout the day, if there's ever any questions at the A area, or when people specifically ask, helps the conversation. Very, happy to group. Ask you 5 trades a day, it dictates.
Yeah. Yeah, we'll see. We'll see what happens. But that's it from here. The futures are trading at, they just came in a little. They're trading at 76. The 75 straddle just on the go out is $25, which is not that heavy. So guess they think they got things under control. So we'll see how everything parses out. Vince, I appreciate you joining me as always. I appreciate the gold fix.
I'll cut down on the profanity. I know it's a family channel.
Yes,
My apologies.
We have no cursing on this channel. No, I'm kidding.
No cursing.
Anyone that knows me probably
call me
knows
zero, and you'll keep me under control.
Vince is apologizing. Everybody. Just this $30 move gets him really fired up in gold. Hasn't seen it in a while.
I know.
That's very kind of you, Mike.
Well, it's funny. I got a quick antidote, and then we'll roll because we're close to the opening, about 8 minutes. But when I was younger, maybe I cursed a little, whatever. My mother said to me, she's like, when you get your first job, you're never going to be able to talk like that. And then my first job was a runner on the trading floor in 1984, and I called up my mother and I said, it's a good thing I learned every word I learned because I need them all. It was, that's the business. So anyway, wish everybody a good trading day. We'll be in the chat as soon as I get off here for the rest of the day, and live multiple times through the day. Volatility is down 14%. And the S&P futures are up a smooth 32. So that's how we're starting the day. We'll be back multiple times. I wish everyone luck. Hopefully everybody had a really good trading week because it was a very good week. And we'll speak with you guys later. Everyone have a great day.